Bitcoin, crypto, morning tea. Hey. Holy smokes, it's Friday in the new year. Chop suey. What's going on in the charts? Absolutely nothing. Say it again. Chop, chop, chop suey. Here we were yesterday, 94.8. Yeah, we talked about getting up to the 200 moving average. Did we? No, just a hair shy there. 97.6 peaking out. We had to get to 98.1. So there is some pushback there. And the bad news about that is this is a lower high. We don't want to see that. Now, the importance of the 200 moving average and getting over it is just to basically for the quant bots, right? Those robot algos are just waiting for a bullish news. This isn't bullish news. This is part of the algorithm lower high. So we won't put in a buy. There we go. Lower high, won't put in a buy. Then we talked about this very thing happening. Going up to 200, getting rejected, coming back to our support. Now, this is being respected. However, we are still just mincing words within our head and shoulders pattern, which isn't good. We want to get out of there. So if you've noticed, there's a lot of rhetoric these days on 80K, 80K, 80K. We'll get to that in the ding dong. You'll see why everyone's talking about 80K. And to a certain degree, it all becomes a self-fulfilling prophecy. You know, you have all these analysts, all these traders talking about the same price. People just get anticipated, especially the passive viewer like myself. Maybe some of you are just locked in hold. It doesn't really matter. We're not going to change the algorithm with a buy. We're just in for the long haul. And so this is what happens. It just becomes a self-fulfilling prophecy because we have this channel of ascension, which is connected to a bear flag, which is connected to a head and shoulders pattern, all bearish. All bearish. But again, this is where the contrarian funny bone in me comes, because when everything starts piling up against each other, I start scratching my head and thinking, well, this is a little abnormal. So what I'd like to see today, because it's Friday, and so hold on, I'm going to take a look. This thing I didn't really like. Yesterday, BlackRock's iShares Bitcoin Trust, IBIT, recorded its biggest daily outflow since it launched a year ago as U.S. trading resumed following the New Year's Day closure. Now, that's not what we want to see. We don't want to see Jan 1 with massive outflows. You know, the optimist would say, let's just start rallying Jan 1st. However, on the contrarian side, it recorded its biggest daily outflow since it's launched. It was the biggest outflow since the product launched in January 2024, eclipsing a previous record of 188.7. So, you know, it's almost the double. It almost eclipsed it by double. The move also marked the third consecutive trading day of outflows for the Bitcoin investment product, another record over the past week. IBIT has seen 392.6 million in outflows. Yikes. The latest outflows may be seen as just a blip, as the BlackRock fund ranked third for inflows. Now, you would think that this would have happened before Jan 1, you know, for a lot of that tax harvesting and whatnot. But it didn't. They started the year out with a massive sell. The leading ETF was the Vanguard 500 index fund with 116 billion in inflows for the year, while the iShare Core S&P 500 ETF closed second with 89 billion in inflows. So maybe in 2025, Bitcoin ETFs take spot via more inflows and higher prices. Commented blah, 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 blah. These analysts. Where do they get these guys from? Bucking BlackRock spot Bitcoin ETF outflow trend on January 2nd were Bitwise Fidelity. So there's a ton of wash trades going on in the market. So before I get into the wash trade, what I don't like to see about this is that we're moving into the weekend, and we know how these TradFi dinosaur, you know, with their abacus, and well, we got to reconcile these sells and these buys, you know, by the time Monday morning opens up, we better start reconciling now. Now it's Friday, 2:30. I got a helicopter to the Hamptons. I don't got time to reconcile. You know how this thing works. So instead of anticipating that Sunday pump, which we haven't seen in a long time, which is telling, right? when we are in an upswing, that Sunday pump, we can almost like set our clocks to it. Oh, 4 o'clock, boom, to the moon, right? We haven't seen that in a long time. So this massive outflow from BlackRock, with the reconciliation taking a long time, and maybe Asia, when it opens up Sunday, front running the selling, may see a little bit of a bearish knock that could take us to what everyone's talking about, which is 80K. And the reason why we get to 80K is this head and shoulders pattern, right? So you take the top of the trend, you take we'll go candle, and you go to about the bottom where we have the resistance. You take the pull, you slide it all, and then you're all, no. You take the pull, you slide it all, and then we're all at. Take the pull, you slide it all. How do I forget my own lyrics, God damn it? That's because I always forget lyrics. And then we're at 80K, right? So it's a perfect play out for all these bearish notions, the head and shoulder, the bear flag, and the channel of ascension. These are all just stacking up on bearish notions, right? So that's where the breakout point, and then we're all right. Back up, kid, of course. You take the pull, you slide it all to the breakout point, and then we're all at. See, it's about the flow, right? Just can't jump into it. So this is where everyone's getting 80K from. The self-fulfilling prophecy and the reconciliation of the biggest outflow in the BlackRock ETF history could end up at 80K. Now, for the majority of us that are just huddle knots sitting here with like in our little dinghy, and the waves get big and the waves get small, we're just waiting it out 80K. It doesn't really matter. This would be like a quintessential pre-pump dump. Let's just go from actual wick top to 80K. Yeah, there we go, 25%. This is, traditional bull market pullback. And I know most of us sit here with these pullbacks and are suspect, because we know that these pullbacks aren't enough. We know it, intrinsically in our head, we know that there's something wrong with these pullbacks, because 2021 we had 30% pullbacks, now 6 times, right? So we haven't really had it. So this would, reinforce the cycle dynamics, right? Because as far as we started to break the cycle with the all-time high before halving, okay, that was first kind of cycle break. And if we start stacking up all these pullbacks, we haven't really seen massive pullbacks, like 15%. Dude, you wake me up for 15% pullback, right? But everyone's losing their mind. And it goes against my thesis that we are all more sophisticated Bitcoiners now. Right, as sophisticated Bitcoin, no one's losing their mind, and so to say that 15% is like shaking out. You hear that? Oh, it's shaking out the weak hands. I don't think there's weak hands in this market. I don't think there's newbies that have enough selling power. Like we're talking about BlackRock selling $335 million worth of Bitcoin. Do you think that there's enough noobs coming in at the top at 108? 335, that even like it's like a drop in the ocean, right? So the narrative of weak hands is just something from a bygone year. This is, I remember everyone saying that. Oh, it's shaking out the weak hands. I just don't see it, and that's why we aren't having these 30% pull downs, because they don't have this retail wick. We don't have the top of the wick or the bottom of the wick that really makes up the majority of those downturns. So we get a sell-off, and it's as soon as it's done, as soon as the sellers, whoever they are, usually big institutions at this point, it's done. I know they tucker themselves out without the dog pile of additional selling from retail. Brendan says, if you look at the drawdowns in this epoch, this is the softest, easiest bull run ever. Yeah, and you know what I don't like about that, Brendan? That starts getting me worried, because whenever we're lulled into a narrative that's when we get like 1970s man slaps woman with the backhand in the face. Wake up! This is not how it happens. You know what I mean? So to a certain degree, this washout to 80K that everyone's talking about would be healthy for the cycle. I know it sounds weird, but it would be healthy for the cycle to have one 30%. It's not like I want it. It's not like anybody wants it, right? We want to go straight to the moon, and that's it. So yes, that's right. Duke says, smash them likes, everybody. We want to go straight to the moon, and that's it. And that's not too much to ask. However, that's not the way the market works. Now, over on the weekly chart, in order to close green, and this is an important green close. Because if we were to have that massive dump to 80K, we would be way down here, which is the initial squiggly line. So, of course, they're wondering where pianomatty's squiggly lines are. Right, guess where? Right by the 61.8% fib, the goldenest of golden ratios. And that would be a hella red candle out of nowhere. Now, that would have to happen today. And as soon as I said that, I'm like, oh, God, I hope I'm not making one of those Twitter videos where I say, a few hours later, I don't want that to happen. I don't want to go to 80K today, because this is what would happen with this weekly chart. We would put in 3 red candles in a row. Now, it's one thing to put 3 dead soldiers on the daily chart. That is indicative of new lower lows coming every time you see 3. And then it gets worse as you go up higher, right? So if you get 3 dead soldiers on the weekly, well, you can almost, what that's telling the market is that we will see additional lower lows, right? So let's say we just closed at 91.8. That's still bad. That's 3 red candles in a row on the Wookiee, 3 dead soldiers in a row, which would mean moving forward maybe a week or two. We might have a green candle next week, right? But then the likelihood of seeing a lower low after 3 red candles is high. Maybe that takes us into the 80s before, Jan 20th. But if we go back in time here on the weekly, where do we see 3 red candles in a row? The first time it rears its ugly head is June 10th. We see 4 in a row, and what happens? We have a little bit of a correction up, but then we put in inevitably lower lows. And then the second time, or this is actually the first time it happened, was early once we hit our peak over at 73. Remember the non-euphoria everyone felt at 73? It's like 73K. Wake me up at 100. It's 100K. Wake me up at 150. And when it hits 50, it's 150K. Wake me up at 200K. This is all so boring. So 73K, and then we put in 4 red candles in a row. And what do we see? Continued lower lows. So we don't want to see it. It's not conducive to an upward trend. All right. We want to see the green candle come in and break it. If not, just to reassure us that the trend is still intact, right? Because after that trend gets broken, we have to face some unpopular opinions that we will see lower lows. Now, how do we see lower lows coming into Jan 20th? Jan 20th is the big day, isn't it? Well, this is where everything kind of comes to a head, right? Jan 20th is a big deal for a bunch of reasons, because it will be the algorithmic quant bots sell or buy signal. So if a lot of those day ones don't come in, we will see probably a sell-off, right? A disappointment. It's like getting bad. It's like a Jerry Pow coming in and giving bad economic data. Like for some reason, we are now in the vortex of bad news is bad news. Remember, for a couple of years, bad news was good news and good news was bad news. We've kind of, I always liken it back to when I would take the bus to school on a rainy day. The windshield wipers were always not congruent. And then every now and then, they would go at the same time. They would lockstep and then they'd move out. We're in that phase where bad news is bad news. So we don't have any day ones. That'll be bad news and the market will probably react. So if you're going to keep your peepers on any price point on Sunday, it will be 95K. So we got to close above 95K to maintain a green candle, which is very important to keep this trend alive. Now, if you zoom out and you're a little more bullish, like I am, we're all bullish here, obviously, we can have what some analysts call a hella bull flag. Seems laborious to do this. Yeah. So there is a bull flag. What is that? Have I already done this bull flag many times? I think I have. Let's see. Is this the same height as the bull flag? Yeah. Oh, no, it's a little lower. I think I went wick to wick. Let's go stick to stick. Stick to stick. We have the breakout, which would be at sign 105. And that would take us to a playout of 142. Wake me up at 188, 140. It's not even 150. Like, why are you even telling me about 142? That's what's going to happen. You know that, right? Everyone's so bored with the price when it's not at all-time highs that they just tune out. It's pretty amazing to see. You know, based on last bull run, there was a lot more bullish fervor, and there was nothing to be bullish about, really, except for just the cycle, right? Everybody was pretty gung-ho about the cycle just going up. We're not sure why, just this is the cycle and we're in the bull run and this is what I was told and okay, this is great. Now we have endless fundamentia, bullish fundamentia, and people aren't that bullish. They're more like, it's about damn time. Do you know what I mean? It's like people aren't intrinsically bullish. Like they don't feel it in their soul. They're feeling it in like the entitlement. You know, like we're entitled to this bull run, so just get on with it. Brendan, sometimes on the other hand, I like to think if diminishing returns, then maybe there's diminishing drawdowns and we just keep stair-stepping up forever. Laura? Is Brendan's actual name Laura? Maybe. I'm not sure. Yeah, well, I mean, that's a new narrative too. Diminishing returns, possibly. But my theory on diminishing returns is no retail. So retail is the emotional swings, right? So you have the initial sell-off, and then the emotional swing comes in with retail. I can't handle it, and they sell off. You know, they're top selling bottom buyers. No. Top buying bottom sellers, right? It's a weird. You can see how you would wash your money to zero. You know, you get the FOMO, you buy in, it immediately goes down, and you can't handle it. And you wait, and it says every day it's painful for you, right? And then you sell. I can't handle it. I'd rather be out than feel these unrealized pains. Like they're unrealized losses and gains, right? And then they sell at the bottom, and it immediately goes up. And damn it! Well, I still got some money. I'm gonna wait though, because I don't want to buy when the price is down. I'm gonna wait till the price is up. As ridiculous as that sounds. And so they watch the price go up and they're like, oh yeah, now it's getting real juicy. Oh yeah, all-time highs, buy it. Boom, goes down. And wash, rinse, and repeat. And before they knew it, they don't have any dry powder and they're off. And guess what? They never come back because they lost all their money in their first experience. That's why my title for the thumbnail, Instant Massive Gains in 4 years. Only we understand that, right? Well, because once you're in for 4 years, you realize all that unrealized pain that never came to fruition was just the speed bump in the journey to the next cycle. And that's essentially what we do here. We watch the price go up and it comes down and everyone feels pain and you want to get out. I mean, I never had that in the bear market. I'm a little bit more of a psychopath though, because I'm already looking forward to the bear market. It will be maybe my last real dump into the market. Like I'm setting up for this next bear market, wherever it may be. And then at that point, I may become just more of a sport leisure investor. Like why would I leave dirty fiat blood money in a bank? Like, I mean, it'll all go to Bitcoin. I just won't build positions. It'll be more of like a real disciplined DCA as we move forward. So that's my plan here. Look at this. This is the monthly chart. We are currently carving out a bullish engulfing candle. I mean, it's not saying much because look at the pullback on this wick. This is a massive wick pullback, saying that the sellers came in and said, no, I'm afraid not. We're not down with that. And we printed this. It's a shooting star candle, which really signifies more bearish prowess historically, right? It's hard on the monthly channel because we won't know if this plays out. Like on the 4-hour chart, we saw if we see this, like, 16 hours, we could have a lower low and then it comes back and like, oh, it played out, right? So when we see on these big time charts, it's it's like those massive cruise ships. They don't move that fast, so you can't really see in real time how it plays out. But what is bullish if we close January? Like, what are the odds of closing January down? I mean, in order to close this candle red, we'd have to close January 96, which means we consolidate in the thickest chop suey that any hodler could ever handle at this point in the bull run, right? But at the same time, it fits the narrative of the pain that the market puts people through. Like if it was easy, everyone would do it, right? So now we're sitting here in January with expectations, which is, red flag number one. Never have expectations and never believe that these expectations are destined to become true. That's when you always kind of get wrecked. So 96.2 would signify that we basically chop sueyed for the next 3 weeks or 4 weeks and did nothing. I don't know if people are prepared for that. I'm not really prepared for that because I'm looking forward to the parabolic bull run starting. Now, there's also a huge narrative in the crypto sphere with AI agents that's coming in. The interesting part about that is what we don't know, right? So I kind of think that we're on the cusp of a new era that we can't even comprehend how it's going to change. So, I mean, when it comes to trading, who would physically trade? Who would actually intellectually trade when you have AI traders? I mean, we have them already. We have those bots you can get, but they're just going to get better. And then now, not only are you trading against the exchanges that are there to take your money, right? That's why they're there, to accumulate Bitcoin from you with your trades. Now you have AI agents that are every second getting better at their trades. Now, the only people left in the market after these AI trades, AI agents and tokens, it makes sense, right? You buy into this AI token and then it does trades, it gives you signals or whatever, right? And what human, and this is why it comes into what we don't know. There's going to be humans that are thinking, I got a knack for this. I have a nuanced human approach to the market. And maybe some do, and maybe that was useful. But now if we end up into a sea of AI agent traders, now you get the self-fulfilling prophecy of robots, right? And there's going to be more of them making more trades at the same time than retail. So we have retail exiting, except for people who think they're pro traders. And then we have AI traders coming into the market. So it's going to take over that. I feel people will, and this is all it'll take. This is all it'll take for anyone who's a pro trader. They will try an AI trader and they will see results. And that's it, because this is all results driven, right? So you may keep, it's almost the way I view trading in the future like I view driving. So I believe Gen Xers, like myself, maybe some of you out there, is that we look at car ownership and driving as a privilege and an enjoyment and a leisurely luxury. You know, I like driving. We think we like driving, right? And until the robot driving is so comfortable that we forget we ever drove and we joke about it. Remember we would drive everywhere? I would drive my car somewhere and I would park it while I was there and it would do nothing. It would just sit there for 3 hours. I mean, it would just sit in a parking lot for 3 hours. Remember parking lots? Yeah, we needed parking lots to hold these cars, or else what are you going to do with your car? And then once you realize that it's not only more enjoyable to not drive and maybe read or just sit there and think, and it's more safe, you'll never go back. And then what will happen is that you'll have some driving maxis who's like, I don't trust them. I don't want to do it. I want to drive myself. And they will be taxed. And so, I mean, like with licenses, you know, if you want to drive your own car, you're going to have to pay an enormous tax because you're such a liability. You're a human. You have nuanced thought. You don't follow this grid. And then I find that will probably happen with trading, because if you want to be a human trader, you will get taxed in losses, right? Just the way it always happens eventually. And then you'll when you do try an AI trader and have moderate success, like what would you rather have? Moderate success that slowly goes up and doesn't really lose? I mean, higher highs, higher lows, right? I mean, it's not exponential 10x gains because you put $100 into a cat coin and went up and, you know, life changing. That doesn't really happen to the majority of people. The majority of people do that 10x at the top and they lose everything. That's fine. That's how the market works. But what would you rather have? A small amount of your capital in an AI bot that's slowly increasing in value? Yeah, there's a little bit of losses, but it's slowly increasing in value. Or do you want to ride the gauntlet of your own take on the market? You know, losing more as AI gets more stronger. You will lose more because you're now up against everything. Really, it's even I think the longer you're in the market and you realize, a lot of people don't realize that what exchanges are there for, like their business model is to get your money. That's their business model. They want you to lose. You know, it's like going to a bookie and betting on a game. They don't want you to win. I mean, they want some people. It's like the full Monte thing. You know, they have a couple people that will win, but the majority will lose. Like a blackjack table, 1 out, 6 in, right, or 5 in. That's just the algorithm for all of these things. And once people realize that and they can hedge it with an AI agent, maybe that happens. Maybe it doesn't. But if it was me with experience in trading, I would take the AI agent over my own knowledge and history of the market any day. And now that's because there's an escalation in the trader's philosophy, right? And this is where it all happens, right? So every trader that I knew, you know, I'm going back to currency, you know, but it can be applied for everything. You know, you're on an exchange trading, right? What happens is that inevitably they take on water. And what I mean, I don't mean like they're drowning, but they'll take on other people's money. You know, like they'll be doing so well that the people will say, hey, can you trade for me? eventually they'll push that off because they know intrinsically, psychologically, once they're playing with someone else's money, it's not their trading game's done. Like it's a real weird psychological factor to play with someone else's money, right? At first you're a little more hesitant, but you're off your game, right? You know, it's like there's certain things you gotta do, or else you'll screw up. Like when you're crossing the road, if you don't go for it, you know, you might get hit by a car. You got to go for it. You can't hesitate. And so when you have someone else's money and maybe you hesitate, you don't want to, oh, this is a little bit risky. Yeah, I would do it with my own money, but you know, I got to preserve capital for these people. And eventually that will affect their trading, and they'll go bust. And you know, a lot of traders out there now, you see on YouTube, they aren't playing with their own money anymore, right? So like, for instance, let's say you go to Johnny Trades and he says, look at this history, click on this link and you can trade, copy trade me, right? As soon as you click on the link, he's making money off your trade, right? So psychologically, he's playing with other people's money too. But in the flip side, where he's more anonymous to the money coming in, but he's still playing with someone else's money. So his wins and losses are no longer that big a deal, because as long as everyone else is trading and clicking on that link, he has a bag that's, you know, always kind of getting full. Whereas most people, you or I, that bag doesn't get filled by other people's mistakes. I mean, it's an unbelievable business, right? Like your bags get filled by other people's mistakes. I just don't think that's the way to do it. And eventually, you know, maybe you get so underwater with other people's money, you make historically risky bets and you blow it. I don't know. I don't really keep in contact with those old traders because they disappear, right? Because if you make a colossal mistake with other people's money, you probably, you know, more or less disappear, and no one ever sees you again. An apparent link of the latest software code between Elon Musk's X has sparked rumors that X Money, its anticipated payment system, may soon launch. Now, this is a bizarre thing because I feel like it's coming at a pretty bad time in Elon Musk's arc. You know, I don't know if you've noticed this, but he's getting a lot of pushback. And someone left a message, someone left a comment. Yesterday I was talking about nerds and their ascension and their inevitable demise. They said, well, what about Mark Zuckerberg and Elon Musk? Aren't they at the top of the game? I'm like, yes, they are. They are at their top of the game, but this is where they ascend, right? Because being at the top of their game money-wise, so as far as we're concerned, when we see like the richest man in the world, that's significant. We find that's a significant metric. But for them, well, he's probably been the richest man in the world for a long time, fluctuating through amongst other nerds, right? But then they need more, right? Because just like the concentric circle of power and money, it's not about money, it's about power, and it's about influence, and it's about being liked. Because at the end of the day, the thesis on the nerds is that they just want to be liked and admired and celebritized, so to speak. And so now this is where you see, you know, he makes a misstep and his own platform kind of goes against him. He's like, oh my God, that they can't be going against me. And then he kind of course corrects and he becomes like a weird avatar and starts talking about video games too. This back and forth of acceptance is where you see the downfall, because they're chasing a dragon of acceptance. And you know how if people are fickle, you know what, he goes back to what they liked, and guess what? They don't like that anymore. What? I thought you liked that anyway. That's where we see the mistakes made, is at the top, at their ascension. When you think that they've done everything they possibly could in their life, then that's when they make their mistakes, because it's not enough. It's like it's rarely enough for humans to have all the money in the world. It's rarely enough for humans to have all the significance in the world, because someone else has a different type of significance. So let's say there's another Elon Musk is cool again, right? And then all of a sudden Zuckerberg changes his whole thesis on censorship, and he becomes the absolute most free platform. Probably never happen, but then that's how he's re-significantized himself over Elon Musk. He took what he wasn't doing, so now he's got a dent in the armor because he's been censoring some people and taking away X's and check marks and whatnot. So you'll see someone competing for a significance, another nerd saying, well, I know how to out Elon Musk him. I will do the mistake he just made. I will take it off my platform. And then you have these tech gods basically competing for everyone's admiration. You don't see that with normal people, because you don't really see them. The true money and power you never see. They're not really that public. They stay in the shadows, and they just enjoy, the success they've had with their family and friends, and it's a small circle. Now tonight is the biggest and best live dueling piano stream in the world. I feel like we've been playing tons because of this Christmas, the Christmas and the New Year's things, and it's like 3 times a week. It's almost a little bit too much for the old box. But we'd appreciate anybody coming and tuning in and watching our biggest live dueling piano in the world. Thanks to the people that tune in here. So that's what's happening tonight. I hope you guys have an amazing weekend, and I hope everything I said about the 80K is wrong.
Make sure you like and subscribe and share this video.